Everyone. This is Robin Fergus from Human Resources, and I am here with my colleagues, Terry Sir, our Chief Total Rewards Officer, Jim Schmidt, our Retirement Specialist, and Brittany Phillips, who leads our communication and compliance efforts in the benefits space. Can you all hear? Feel free to chime in on the chat if you have a question today. I'm going to ask my colleagues, Brittany. I think Brittany's going to lead our chat. And Brittany, would you like us to hold questions until the end?
I think we can have folks ask questions as they come up, and if there's time while we're going through, we'll go ahead and interrupt. Otherwise, we'll certainly address all of them at the end.
Great. Thank you, Brittany. Okay, so with that, we're delighted that you've decided to join us this afternoon, and we have a very robust presentation to get through, so we'll go ahead and get started. If you're on the call today, you're interested in learning more about our voluntary retirement incentive plans. So if we could advance the slide. For those of you who are of retirement eligibility, this is a very exciting program that we're thrilled to offer. I must start by saying many thanks to Terry and the entire benefits team for all of their hard work pulling together this opportunity for our employees. This is a wonderful way to help individuals contemplate a retirement decision in very difficult financial times. And we're delighted to be able to offer this to our workforce at this time. So the VRIP, you'll see we've abbreviated that throughout the presentation today. That stands for Voluntary Retirement Incentive Plan. A little background on this, our team was asked to put together some options for the university to consider due to the financial crisis of COVID. And ultimately, President McConnell and the board and our systems office have opted for a plan that will offer the opportunity to both our faculty, AP, as well as state classified employee groups an incentive program. And we'll walk through the specifics of that in the next few slides. We are very excited to share that the program did launch on June 1st. We'll be accepting applications through the end of June. And the dates that are available to initiate a retirement are August 31st or December 31st of this year. One-time program, there's no guarantee that this incentive will be offered again. If you had previously announced or submitted paperwork to initiate a retirement prior to the announcement of this plan, you would not be eligible for the program. And in order to receive payment for the incentive, part of the criteria includes and you would be ineligible to be rehired with the university within 2 years of your retirement date. Otherwise, you would have to repay the incentive to the university. Could you advance the slide, please, Brittany? A little bit about the process. We do have an approval process. As I mentioned, the main criteria is to save the university money. So in order to qualify, an employee must submit an application. The benefits team will receive that application and ensure that you meet the minimum eligible criteria to qualify for the plan. And then the application process itself will advance through the various levels that you see outlined on our slide. The department head would be asked to provide a business case that justifies how the unit would realize a cost savings with your departure. So that is, again, the main criteria in order for approval. So will the position be backfilled? Will the position be backfilled at a lesser salary, or potentially there might be a redesign or restructure being considered of the unit in order to realize cost savings? And from there, it will advance through the dean or vice president of your organization, And if under the provost's review, it would go through the provost and then ultimately through our CFO and to the president's office. So it is a very robust review process. And along the line, there will be conversation happening throughout with the units because we are operating under a very tight timeline. So we want to make sure that information is being shared freely, both through the application and conversations are happening offline. As I mentioned, it is voluntary, and we want to make sure that there's no undue influence to individuals as they're considering this option. It's very important that you yourself make the decision and get the information that you need directly from the sources in our benefits office and speaking with the eligibility criteria to ensure that you understand how the application and the process would apply to your situation. We all have very nuanced situations. We may have joined the university and left and come back again and want to make sure that your service credit is accounted for appropriately. And Jim and Terry will talk about that a little bit later in our presentation. And once again, this is a one-time offering. There's no guarantee that we'll be able to offer a program like this again. So want to make sure that you have all the information you need to make a timely decision. We're already halfway through June, and the program application period does end at 5 p.m. on June 30th. With that, I will hand it over to Terry, and she'll walk you through some more about the program and the criteria. And I know Brittany is assisting with questions in the chat, and we'll address those as we go through the presentation as appropriate. Terry, would you like to take over the next slide?
You bet. Thank you so much, Robin, and hello, everyone. I'm just waiting for my slide to advance. There we go. So sorry if I have a delay on my part. All righty. Well, first of all, what we'd like to do is share a little bit of the integral details that I know a lot of people have been asking of us in the benefits unit in human resources. And first of all, we'd like to start with the faculty, administrative professional, and non-classified staff incentive. The parameters for the plan include an incentive that's equal to 1 week of the employee's annual base salary for each year of retirement eligible service. There is a maximum that is also available, and that is up to 30 weeks total. So ostensibly what that means, if you would happen to be an employee who is interested in applying for this program and have 30 years of service or greater, you would be eligible for up to a 30-week incentive. So pretty fantastic benefit program. Now for those individuals that are enrolled on the university's defined contribution plan, there are some very key enhancements that are being provided under the Voluntary Retirement Incentive Program as well. As many of you know, a defined contribution plan basically has the contributions go in to your retirement vendor that you've chosen, and that could be AIG, TIAA, or Fidelity Investments in the university's current relationship. What that means is your contributions go in, so the contribution is defined with yours and the employer's, and then the value of your account is what you're eligible for to take retirement distributions in the future when you retire. Now for DCP participants who are under age 65, you will see that there is a table on the right-hand side of this slide where it talks about your years of service. Now that service is in quotes because Jim's going to elaborate on that a little bit later in our presentation. But the rules of the university that define the eligibility for retirement are based upon, excuse me, benefits eligible service. And so that's really a key thing to keep in mind until we get to the definition soon. Now the subsidy, if you look at this chart and you have 20 plus years of service, again as a DCP participant, you would be eligible for a $560 DCP premium refund that would be provided to you to help bridge the insurance gap until you turn age 65, which is Medicare eligibility, or up to 5 years, whichever is less. So I know we often get a lot of questions on how this works, and so we'll be sure to answer those as well. I'm going to pause for just a moment. Brittany, would you like to share any notes, or is there anything in the chat at this time before we move forward?
There aren't currently any questions about this slide, but there are a few about the previous slide and the approval process, if you want to address those now, or should we wait for the end of the incentive slides?
Sure, if you want, go ahead.
Okay. So when will the employee be notified if they've been approved, and is the incentive taxed?
Okay, two very important questions. Well, currently, as Robin said, the plan application period ends June 30th at 5 p.m. And so certainly there'll need to be a period of time in that early July mark where the university constituents on the flow chart again that Robin showed with all the colorful arrows, will have to make a decision on if there is a bona fide savings to the university and if the application meets the needs of the university for approval. So again, that'll take place at some point in July. Again, the first focus will need to be August retirement dates that have been selected. Those will have to be acted on quickly just because August is a date that I'm sure we're all feeling like every day and every month, especially in our remote work opportunity, is moving by just in lightning speed. At least it is in my world and the world of my family. And the second question about taxability, yes, of course, any lump sum distribution or incentive such as this retirement program is taxed. It is taxable under the IRS rules at a flat rate. I believe that flat rate is 22% of income. So that'll be a separate common denominator for everyone. Anything else, Brittany?
There are some more. So the next question is, can the dean or provost office deny someone's application?
So the application process is a very much a committee approach. And so what happens is human resources is the first step. What we're doing in our benefits unit, and also our records team is doing a lot of heavy lifting for us, looking at people's years of service through all the many, many years that they've worked at the university, so that we then can determine how much of that service is benefits eligible service. If we determine that someone meets the age and service criteria defined by the university, then what we do is approve the application to go through workflow. What that means is that we'll first go to your respective department head, and that will depend on if it's a college or an administrative unit. If it is a college, then it will also go to the dean. If it's an admin unit, it will go to the vice president. And then again, for academic units, it will go to the provost next, and then it goes to the CFO, which would be the chief financial officer of the university. And then at that point, it will be reviewed and submitted to the president for final approval. So again, not a singular person is making the decision. It is definitely a committee approach.
And so one more question about the application process. How soon after I apply will my department head be notified?
That is another great question. We have been working so hard in human resources with the records team and again the benefits team, just trying to get everyone's service in line. It's a difficult process because many of you have worked at the university for upwards of 20, 30, 40 some years. And that means that a lot of the service history actually predates our Oracle system. And so we are having our critical personnel that are in human resources on a daily basis helping us with pulling employees' actual paper files, which are your records file here in HR. And that really helps us make sure before we make a decision on what your incentive years of service would be, that we have the factual data in front of us. In some cases, we can do that for employees that don't have service in a paper file that we need to obtain within a matter of a couple days. But honestly, I can say for those that are more difficult, it's taken us sometimes 7 to 8 days before we can turn them around and push them through the workflow. But again, just know that we're doing our best. We want to make sure what we let into that queue is absolutely correct.
The next question is, if I've applied for the incentive but am declined, would I still be obligated to retire? What should I do in the event that my application is declined?
So there is an important caveat that certainly I'm happy to speak about, which is in the plan, I'm sure many of you have read that plan very finitely, understanding the details. There is a separation agreement and general release form. Now what will happen is as soon as someone's application has been approved, Human Resources, again primarily Jim and the benefits team, will be reaching out to those applicants that were informed of by the President's office that we need to proceed with retirement counseling on. What we will be doing is providing not only our normal counseling, we have quite a bit of paperwork that we fill out and just work with each retiree to make sure they understand the longevity of their benefits at the university. But this separation agreement and release form is a legal document and it's a binding document, which means it's very important for you to have a period of time to review it before you would execute it or sign it. Now at that point, if you chose to not continue to proceed, you simply would refrain from signing that agreement. And then at that point, the process would stop for you. Now, while I say that as, you know, kind of an easy process, if you will, we do want to make sure that people really are invested at the time that they apply in really wanting to exercise the benefit under this program. Again, we do realize there could be occurrences where people do change their mind at the last minute, but it's a very tedious process and we're just wanting to make sure that we're putting every application forward just as quickly as we can with all the research that needs to be done. If you have inquiries and maybe you're not yet ready to actually hit the button and say submit, I want to apply for this program, what I would recommend you do, as literally hundreds of other employees have done through our HR Service Center, which is again myhr@colostate.edu, and then the benefits team is assisting with answering those questions. We've literally had hundreds of employees just inquiring and asking us very specific questions about what this would mean to them. That's a better avenue before you make a final decision on if you want to volunteer for program participation. So again, happy to answer anything and everything that we can.
Terry, this is Robin, and we have quite a few questions in the chat. I know Brittany is monitoring the chat, and a lot of questions related to tax incentives as well as lump sum payments and as well as how the benefit is calculated. And I just wanted to let everyone know we have a few slides coming up where Terry and Jim will speak to those options, and we'll get to your questions and reserve time at the end of the presentation as well. But I just wanted to flag that we're getting a lot of questions and the information is coming up on a few slides here.
Oh, perfect, Robin. Thank you. And I'll try to speak to those as I'm moving through the next slides. So Brittany, if you wouldn't mind advancing the slide. And then also before I jump back in on this next slide, just a reminder for everyone that has the pleasure of joining in with us in conversation today, can we please ask that when you're putting your information into the chat to please refrain from putting any identifiable personal information in. It is very important from a benefits and a human resources perspective that any individual benefits related questions do remain anonymous, if you will, by way of the chat. Just want to make sure we're safeguarding your personal information and anything about your specific retirement scenario, and ask that you reach out to us individually with those questions, and we would be happy to go through them very thoroughly with anyone. All right, so now the examples as Robin just shared. Let's walk through a couple of examples. Again, we're still on Faculty and Admin Pro, and this will actually demonstrate how the base salary incentive is calculated. So example number one is for a 9-month faculty member who is 100% FTE, so full-time. They are 57 years old, and they have 32 years of retirement eligible service. Their annual salary is $75,000, and as the plan document reads, it is effective as of the most recent academic year, which would be May 16th. To do the calculation, it's simply 75,000 divided by 39 weeks, which is the divisor for a 9-month assignment. That comes up with the weekly equivalent, and then we simply multiply that times the eligible years of service. Now in this case, in this example, this individual has 2 additional years of service that exceed the plan maximum of 30 years. And so what would happen is we would take the max weekly incentive of 30, multiply it times the weekly amount, and that would come up with the grand total of the base salary incentive for this individual. Now again, remember, these are subject to tax withholdings. all taxes that you would normally see applied through your payroll would be subject to this incentive as well. The only difference is it's not your W-4 withholding that actually drives the taxation on the incentive. Again, subject to IRS regulation, a voluntary plan and a lump sum incentive is taxable at a flat rate. And again, I believe that rate is a flat 22%. All right, example number 2. For a 12-month admin pro, this person is half-time, so they're a 50% FTE. They are 66 years old. They have 8.5 years of retirement eligible service. Their annual salary over a calendar year is $120,000. And again, the marker in the plan for when is that salary measured as of is the month of June, so it'd be June salary. Again, the lump sum is prorated by FTE, which would be the first thing that would need to be done in this situation. So that would be $60,000, which is half of the salary, divided by, for a 12-month employee, 52 weeks. And then the weekly amount is subject to 8 weeks for the incentive. Now you may go, well, how come this person has 8.5 years of retirement eligible service, but you're only multiplying that weekly amount by 8 years? Well, do remember in the plan, it does state that in order to receive the next year's incentive, so that additional week, you have to complete the entire year. So for a 9-month person, that would be the entire academic year. And for a 12-month employee, that would be a full calendar year. So in this case, because 9 years was not achieved and 8.5 years of service was the maximum, the incentive is based upon 8. So I hope that's helpful. Could we move to the next slide, Brittany? Okay, now we're going to jump right into state classified employees. So thank you for your patience for those of you that joined in that are classified staff. The incentive for the benefit program for our classified personnel is one week of base salary, again, for each year of retirement eligible service, not to exceed 18 weeks total. Now, as you can see in the orange box on the upper right-hand side of the slide, you may wonder, well, how come it's only 18 weeks for state classified individuals, but yet it's 30 weeks for a faculty or admin pro employee? Well, the answer to that actually is held within the State of Colorado Department of Personnel and Administration rules, which govern the employment, again, of state classified employees, as I'm sure you're all familiar with if you're a classified personnel at CSU as an agency of the state of Colorado. And so what it says in their personnel board rule is any other post-compensation benefit can be provided if the plan is approved under the appropriate channels for approval, which certainly the university, in tandem with our Office of General Counsel, did proceed with getting that done in a legal form through the state to make sure that everything could be provided to our employees here. But again, the maximum that's provided under that rule is 18 weeks. And so for the university, we felt like it was very important to include the classified staff in the voluntary retirement plan incentive, but also to be able to afford up to the maximum that we were allowed to by rule with the state. Now, another deviation for state classified staff is the retirement plan is one option, and that one option is para. So commonly known as, I should say, as Colorado Para. In fact, many of you may have joined into the Colorado Para presentation that was given this morning via webinar. Para is partnering with us for all of the individuals that may be applying for this program to understand the retirement process through ParaCare, and I'm understanding there were about 100 people that were on that as well. So thank you so much for participating, and great job, benefits team, for hosting that with Para. So let me jump down now to the second bullet on the left. This would be ParaCare. Now, ParaCare is medical insurance that is actually lifelong medical coverage. You can receive ParaCare through your Colorado Para defined benefit plan before or after age 65. Now, do remember one of the very distinctive differences with a defined benefit plan is a defined benefit plan under the regulations for retirement plans state that you are promised a benefit based upon your age and service in retirement. So I'm sure for all of you Colorado Para members that you're familiar with your quote table, which is based upon the date that you became a Para member with Colorado Para, where it will show at what age and what percentage of your salary, either full or reduced, would you be able to take if you retired through Colorado Para? And then we've just got some navigation down on the right-hand side and some helpful tips for reaching out to Para. Again, I would suggest if you are applying for or considering this plan, if you did miss the webinar this morning, do reach out to Para directly and speak to one of their customer service representatives. And that number is 800-759-7372. All right, Brittany, let's jump into the examples for state classified. Okay, example number 1 on the left. This is an example of a 12-month state classified employee who is 57 years old. They are a full-time FTE. They have 32 years of eligible service, and their annual salary is $50,000 in June. The lump sum payout would be calculated by dividing their annual salary by 52 weeks to get the weekly variable, which is then multiplied by the maximum of the plan, which is 18 weeks. So again, even though this employee had 32 years of service, the maximum that the plan provides for is up to 18 years or 1 week for each of those 18 years. Example number 2 is a part-time employee, so a 12-month state classified employee who's 66 years old. They are 3/4 FTE or 75%. They have 8.75 years of retirement eligible service. Their annual salary is $80,000, again in June. The first thing that needs to be done is to prorate their FTE and to get an equivalent annual salary, which in this case would be $60,000, divided by 52 weeks, and then the weekly amount is multiplied times 8 years. Now again, in this example, even though the person had 8.75 years of service, because they had not yet reached 9 years of service, the incentive is payable at the 8 weeks. All right, Brittany, if we could advance to the next slide, and we'll go through this one really quick. I think it'll answer some of the additional questions, and then we'll pause for just a moment for a few additional questions. Okay, again, some other very integral details of the incentive plans. We've just kind of listed them here so that you'll be able to all see them in black and white more easily. Getting a lot of questions again on the taxability, and what does that mean if I am an August retirement date? When is my lump sum paid? Well, your lump sum would be paid in the month of September. So it would be the month following the date of retirement. And then it would be taxable for W-2 purposes in calendar year 2020. Now, a little bit different for December 31st retirement dates, because that lump sum would be paid the month following the date of retirement, and it would actually jump into the new calendar year. So that lump sum incentive would be paid in January of 2021, which then of course renders it as taxable income in the 2021 calendar year as well. Now, a lot of people are asking, well, why can't this lump sum distribution count towards my retirement contributions for either PARA or the defined contribution plan? And unfortunately, it is not actually allowed under the regulatory codes for lump sum incentives to be included for compensation purposes, because it's actually not work that you're performing to receive that remuneration, which is why it's rendered ineligible. So basically that means that the lump sum will not help you increase your highest average salary with Colorado PARA, and there also will not be contributions that are contributed on top of that amount into your DCP. Now for Faculty and Admin Pro, just one caveat and an additional enhancement that was put into the plan has to do with the annual leave payout information. And again, many of you are probably well aware in the faculty and AP manual, it does state that when you separate service from the university, which in this case the retirement separation date would qualify, there is a maximum payout for annual leave of up to 24 days that is allowed to be paid out. But generally that is limited by any annual leave that you take 30 days prior to your date of retirement. So in this case, what we recommended to our administration as they were looking at variables for approving the plan was to remove that 30-day prior caveat. So we're very excited to say, you know, if anyone has elected an August retirement date, if you had a 24-day balance, then that full 24 days would be paid out. unless of course you've used any time in before that would reduce that balance, but a huge incentive for people. Again, for all of you that are state classified employees, please do remember that any termination payouts, if you will, which is kind of a strong word as it's defined under the personnel board rules, but simply what that means in a more softer approach, again, is that you've just decided to leave the university, and in this case it would be under the Voluntary Retirement Incentive Plan. And those leave payout parameters do not change. We will follow the same rules that are defined by the state of Colorado. And then lastly, a lot of questions coming in about annual and sick leave payouts, and can they be deferred to a voluntary retirement plan like the university's 403B, Colorado Para's 401K, or Colorado Para's 457. And a lump sum incentive payment actually is not allowed to be deferred to those programs under the IRS regulations. Now, one of the enhancements is, though, if your leave accruals are reported timely, so this will be key when we're working with all of our wonderful HR professionals across campus who are responsible for entering your remaining leave balances in your final Oracle action. That is how HR is notified that you'll be leaving the university. When those are timely reported, what Jim often does is he works with our pre-retirees about what are those accumulation values for that annual and sick leave, and would you be interested in deferring them? And that part is definitely allowed to be contributed to a voluntary plan. Again, just the lump sum incentive is something that's not. All right. Brittany, are there any, or Robin, either of you, are there any thematic questions that we should stop and answer, or should we keep moving into the communication strategy?
So I think there are some questions about the medical premium refund. So I'll go, and just to ask everyone on the call too, if you have questions, to ask them in the Q&A section. It's easier in there to manage what has and hasn't been answered versus the chat. Okay, so for the medical premium refund, is the only criteria for being eligible for the medical premium refund being a part of the DCP? Does it matter whether the employee has been signed up for a CSU health plan?
Oh, Jim, do you want to jump in? Because you could probably answer that question and then also add a little bit of a caveat about active employee enrollment.
Sure. So hello, everyone. So the defined contribution plan medical premium refund is for our participants in the DCP. There is not a requirement that you're in a CSU medical plan to be a part of the DCP refund when you retire. However, there is another benefit, which there's a retiree health plan equivalent to the CSU Green Plan that is available for DCP participants, but only those that have been in a CSU medical plan for 1 year prior to when they retired. But don't get too excited. That retiree medical plan is extremely expensive, 2 to 3 times the cost of what our COBRA plan is. So anyway, so the question to the answer to that question is, you don't have to be part of the medical plan if you're a DCP participant to be part of the DCP retiree medical premium refund.
Thank you so much, Jim. And then I would just lastly add on to what Jim just shared is, again, a reminder that the DCP premium refund, again, that is for those employees that are enrolled in our DCP retirement option who have not yet turned age 65. So if you look at the slide that Brittany has rolled us back to in the green chart, you can see in the years of service. Now the years of service begins at year 5 because, again, retirement eligibility is 55 with 20 years of service or age 60 with 5 years of service. You can see that it's prorated based upon your years. It starts at $140 at the 5-year mark, and at 20 plus years it goes to $560. Now I didn't elaborate on this slide earlier that $560 is actually tied to the current annual monthly premium for our green plan. So those of you that are enrolled on the CSU medical benefits, you'll know that that is equivalent to the green plan cost. Now again, a lot of questions have come in about, but if I'm a DCP participant, I'm not a para participant, so I don't have an option just to go under Paracare. Where am I going to get my insurance coverage? Well, Jim used a keyword a moment ago, and that was COBRA. So for those of you that aren't familiar with COBRA, it's again yet another fancy legal word that basically means continuation of your benefits. And you are allowed to continue your benefits for up to 18 months when you would separate your service from the university. And then you could use that money that you would receive from the university to help pay for your medical premium if that's what you chose to do. Also, the option of the retiree green plan, again, that, as Jim said, is quite expensive. The reason it is so expensive is it is a retiree population. And so the premium costs for a retiree population of healthcare expenditures traditionally will cost a lot more money. And then lastly, don't forget about the marketplace exchange. Now that is part of healthcare reform, or what you may also remember as the Affordable Care Act, which certainly we still do have a lot of reporting requirements under the ACA, as it's commonly known, that Brittany and I work on every year to send you the 1095C tax form that many of you are used to receiving from HR. I've heard a lot of people are having great luck with finding reasonably priced benefit plans through the exchange, and also ones that have really good coverage. So there definitely are avenues for you to find medical coverage if that's a concern to you.
Terry,
Yes?
could you speak to, if I as the employee am Medicare eligible, but I have family members who I'm covering on my plan, how would the subsidy work in that circumstance?
Thank you, Robin. So the subsidy is directly tied to you and your age as a potential retiree and participant in this program. So the DCP refund, by function of normal plan rules, is only tied to your premium. And so if you have other individuals that are still part of your family that are getting insurance from the university, that premium refund would not apply to their coverage. So again, it's your age and your service. If you are over age 65, then the DCP premium refund that you would be eligible for is actually what we call our current retiree DCP premium refund. Now that is a little bit different. And again, this is something that gets a little slippery here in speaking to so quickly. So I hope that you'll all understand what I'm referring to. When Jim meets with people and counsels them currently, so outside of this voluntary retirement incentive plan enhanced benefit, the minimum amount that a retiree can receive, again a DCP retiree, is $50 a month, up to 20 plus years of service is $200 a month. So in your case, you could, wherever you get your medical coverage, and maybe it's through Medicare, or maybe you're buying a Medicare Gap plan, if your individual cost of your medical coverage for you is more than $200, you would receive that full $200 from the university. And again, we can speak through that more specifically with individuals if you want to reach out with us.
All right, so more healthcare and premium refund questions. Does the university offer a medical premium refund to state classified employees? And then the second part, can state classified employees get health insurance via a different carrier, not through Paracare?
Okay, thank you, Brittany. So for state classified employees, as far as a refund from the university, again, the distinctive difference here is state classified employees are in a defined benefit plan. And that defined benefit plan bears the cost not only of your lifelong promised retirement benefit as a function of your years in service in that plan, but also it's a function of your eligibility for Colorado Para's health plan. Now in the health plan, if you're familiar with the booklet that they have available on their website for pre-retirees, there is a table in the back. That table in the back has a years of service that would give you, as a para member who's eligible to enroll in Paracare, a subsidy from para that will also help reduce your costs. So that subsidy would come directly from Colorado Para. Now the second aspect of the question, can you go somewhere else and purchase your insurance? I would say yes, you certainly could, but I think that first and foremost, you really want to look at the advanced benefits that are provided to you, again, by function of your retirement benefit. the paracare benefits are extremely robust. And again, they're not only for age 65 plus, they're also for pre-retirees that are retiring at a reduced para rate before they meet paracare eligibility. So again, some really important conversations to have. Certainly Jim can help to some extent, but also Colorado Para can speak to those plans and how robust they are. And they are lifelong medical benefits that are available to you as a para member. All right, Brittany, do you want to jump into the communication strategy, and then we'll come back to questions again in just a little bit?
Sure thing.
Wonderful, thank you.
All right, so I'll just briefly talk about our strategy for communicating the voluntary retirement incentive plans and the different approaches that we took to help get the word about the program given the short amount of time that folks have to apply. So hopefully you've all seen the VRIP website, which includes everything you need to know about the plans, the definition of CSU retirement eligibility, the governing plan documents, as well as a link to the online application. So if there's time at the end of the presentation, we can do a quick walkthrough, but given that it's already 2:40, that seems unlikely. So the link is included here if you want to visit that website and kind of explore what's there. There was a question about the slides being sent out. This session and the session that we held last week are both recorded, so one of those versions will be posted to the website hopefully before the end of the week. Beyond the website, we also sent targeted email communications to benefits eligible employees. A copy of this is on that VRIP website in both English and Spanish. Messages were also sent to campus HR professionals and supervisors of benefits eligible employees, and that provided plan details and also guidance for answering employee inquiries. That message was also shared with KPAC and CAG, who are important partners for HR. There's also a source article which was published. It's linked from the source homepage as well as the VRIP website. And then lastly, an email to directors, department heads, and deans was sent out by Robin, and that email had information and instructions for completing their portion of the application, which, as you saw earlier in the presentation, is routed through them before being sent to the provost, CFO, and president. And then, of course, there's ongoing outreach being performed by the benefits unit. We have received a very high number of inquiries, and we're excited. So many people are interested in the plans. We're answering those emails just as quickly as we can while ensuring that we're providing accurate and helpful information. And then Jim is performing phone outreach. I think he's on the phone probably all day long answering questions. So of course, if you have any other questions for us, you can always email my HR or email Jim and we'll address those.
Brittany, that's one of our questions. Are we available for individual conversation and in-person consultation? Would you mind speaking to how to set up a time to speak with our benefits specialists?
Sure. So we are all working remotely right now, given the restrictions that are in place on campus. So the best way to set up an appointment to speak with someone either on the phone or via Microsoft Teams is to email myhr@colostate.edu, and we are kind of divvying those up. Jim is definitely handling most of them, but there's other folks on the benefits team who can also take those appointments.
Thank you.
Sure. So another important part of the communication strategy was hosting these virtual education sessions. I know for myself, I always find it helpful to hear subject matter experts talk through the details of something rather than just reading the plan document. So many thanks to Terry and Jim and Robin for sharing their expertise with us. If you're a para-retiree, there are 2 informational sessions that they're holding as well that kind of go over the steps required to initiate retirement through para. Those are not being recorded, but there is a general version available on their website if you just search retirement process. That PowerPoint will come up for you. And then lastly, Josh Weller, our representative from Social Security Administration, is hosting 3 sessions for all CSU employees to attend. Because CSU is a non-Social Security employer, the focus of those sessions will be the windfall elimination provision and the government pension offset, which could impact Social Security benefits for CSU employees. Those are not linked on the website just yet, but they will be soon, and an email went to all of campus about those sessions last week, so certainly register for those if you're interested in hearing about that information. And that's all I have, so I will hand it over to Jim, who's going to talk to us about retirement eligibility.
All right, well, hello again, everyone. And it seems fitting, I said this in the first session, but it seems fitting that an institution of higher learning would have a retirement definition that's a page long. I'm going to try to make it really easy for folks to understand what do we count as eligible service for retirement. And Terry already mentioned 55 with 20 years of service or 60 and 5 years of service. That is going to be the definition for most of us. That 55 or greater, you got to have 20 years of service, and I'll define service in just a moment, or 60 and 5. There'll be one caveat that we'll talk about at the end because there's always an exception. So that's the general rule. And now let's talk about what service means on the next slide. Okay, so service. Think about service as benefits eligible time. So you're eligible to receive the university's contribution to the retirement plan. You had an appointment of at least half time, and you received the university's contribution toward health insurance. So a note on the bottom says that, hey, you can have breaks in service. Somebody may have left the university and come back, but you have to have 5 years of service preceding your date of retirement. So again, service benefits eligibility. So what's not service? Well, when you look at faculty and administrative professionals, many times it's going to be time less than 50% or less than 20 hours per week. So that time would not count as retirement service because it was not benefits eligible time. Prior to January 1st, 2014, if temp service greater than 50%, the first year of temp service greater than 50% did not count as benefits eligible service. So those are some examples of what doesn't count as service. And on state classified, what we would see a lot is non-student hourly service. Non-student hourly is para-service, but it's not university service toward retirement. It is a non-benefits eligible position. So hopefully that helps explain service a little bit in terms of what we look at as the benefits team and the records team when we're looking at someone that is applying for this program or going to retire in general. The records team is building up that history, your entire history at CSU, and the benefits team is reviewing that history to make sure that, you know, we can quantify and qualify the service in terms of retirement and retirement benefits. So I mentioned that there's one caveat, which I think is on the next slide, in terms of retirement eligibility. So if you were in para or are in para, and you were in that position on or before June 30th, 2005, and have had no breaks in service since that time, we say if you're eligible to retire with para, you're eligible to retire with CSU. Now, you say, well, what does that mean? It could mean that somebody could be 52 or 53 and have 20, 30 years with CSU. They wouldn't meet that definition of 55 and 20, but since they were in that position prior to June 30, 2005, if they're eligible to retire with para, they're eligible to retire with CSU. You might also see somebody that is 57 years, and maybe they've only been here for 15 years, 16 years. And we say, well, they don't have 20 years. But again, if they were in that position prior to on or before June 30th, 2005, then they could be eligible to retire from CSU, but we would need documentation or some verification from PARA that says you were eligible to retire with PARA. For example, you might have bought service credit. We wouldn't necessarily know about that. You might have worked somewhere else as another state employer that was under PARA, and we wouldn't know about that service. So again, that doesn't affect too many people, but just know that there is this exception for PARA people in their current position with PARA prior to June 2005. So hopefully that helps give a little bit of flavor to what do we mean by retirement and what do we mean by service. And of course, that's why we have our records team and benefits team working together to make sure that we are looking at everything very closely when somebody applies for this program or just in general when somebody is getting ready to retire. So with that, Brittany, do we have a last slide or going to you again, or is it time for questions?
So Brittany, I'm going to jump in. This is Terry with just a few questions that I saw, and I tried to answer a few for our participants in the chat as well. So hopefully that was helpful. So if you want to have a chance, Brittany, to kind of review for additional themes, let me go ahead and just grab a few that I highlighted really quickly outside of the chat. All righty. So the first one that I saw said, what happens if I select December as my retirement date, but my FTE decreases from 100% to maybe 75% in September? Will my incentive amount be recalculated, or will it stay at the June calculated amount? That is a wonderful question. So again, the plan documents say that if you're a 9-month employee, then your calculation is locked as of the most recent academic year, which should be your salary on May 16th. If you're a 12-month employee, the plans do state that that is salary paid in the month of June. And so in the way in which this question is being asked, the answer would be no, it will not be recalculated. It will actually be froze as of those dates that I just shared. Now it looks like there is also another question that said, is the salary upon which the incentive based the salary on June 30th or some kind of high 3 quote average? And then it says something to the effect of previous question about quote high 3 is for a DCP, not para. So yes, I did mention earlier your highest average salary, and I apologize, I didn't define what I meant by that. For those individuals that are members in Colorado PARA, that defined benefit plan does have a rule that they will calculate your highest average salary over a period of time. For many of you that are eligible for this program, it likely could be over 3 years, but the PARA legislative rules have changed probably since you've joined PARA, and that actually now goes up to 5 years for some individuals. So when I use highest average salary, which is generally a 3-year time frame for, again, those people that will qualify for this plan, that does not in any way have anything to do with a calculation under the defined contribution plan. Again, very different types of plans. I grabbed one other question here about, I think Denise had said, sorry I missed about sick time payout. And I think there might have been another question as well about using annual leave. So let me just start with the sick leave question. So again, for all of you that are state classified, again, any sick leave payout is going to be in accordance with the state classified rules. More specifically for faculty or admin pro, if you are retirement eligible, which certainly you would be if you're applying for this program, what would happen is you're eligible for 1 quarter up to 15 days of your sick leave balance to be paid to you at retirement. So that would be the sick leave payout requirement for faculty and AP. Now, if I circle back to the other question about can I use annual leave in the 30 days leading up to my retirement, what I would say to that is certainly that would be a conversation to have with your department. to make sure that, especially if you've chosen like an August retirement date, and that would be the date that you're approved under separation of this program, that you do work with your department to make sure the business needs of the unit are being covered. So again, not a plan rule and not an HR rule, but certainly a conversation we would encourage for you to have with your department. Now, Robin and Jim and Brittany, I'm going to turn it back to you with what other questions did you all see? Oh, actually, here's one more before I have you jump in. I apologize. If I move from Admin Pro to non-tenure track faculty, does it use years of eligibility for just the faculty years or all inclusive? So again, if you look at eligibility for benefits, eligible service is benefits eligible service, which means you're eligible to receive the contribution towards the retirement plan or perhaps your medical plan from the university. So both an admin pro and a non-tenure track faculty member, as long as they're not in a temporary capacity, would be eligible for that years of service to count. Now again, that gets really specific, which is why our records team is working so hard to put together everyone's years of service for us that meets that benefits eligible requirement so that we can then look at it and add those years together as applicable. Okay, now I'm going to turn it back to the three of you for what else you think we should highlight.
Thanks, Terry. A couple of questions I think that occurred early on in the presentation I would like to go back and readdress. A few questions about how does the terms of the contract apply in cases where I might come back to teach possibly at CSU online or coming back to a graduate assistantship if I'd go back to school. And I think Terry and Jim and Brittany jump in here, but my understanding is that the plan document outlines any part-time or full-time employment with CSU in Fort Collins would be not allowed within that 2-year window. So if you were on our payroll, that would preclude you from returning if you wanted to not repay the incentive. So any paid part-time or full-time relationship with the university would sever the viability of the payment. Hopefully that helps explain. And another theme that I saw, Terry, was when will we know that we're approved for the incentive? And it's looking like an early July timeframe. Is that correct?
Mm-hmm. That's our goal. As long as we can get everything pushed through from the colleges and the administrative units back up to the CFO and president, we will be waiting with bated breath in human resources for approvals to come to us. And as soon as we receive those approvals, we will immediately begin reaching out to the August retirement dates very quickly so that we can have virtual conversations, I suspect, and start filling out the paperwork that is required.
I also saw a few questions about options to spread out the lump sum payment. Could you speak to that, Terry?
Absolutely. So sometimes you will see in an incentive plan that is a written option, but what was determined within the best interest of the university for our program is it will be a lump sum payment as defined in each of the plans, which will be paid the month following the date of retirement. So that will not be an option under our plan. Thank you for asking.
Jim or Brittany, do you have any other questions that you're picking up on that we may have overlooked?
I think there was a question about if the years of service are based upon the date you apply or the retirement date. And also, if someone were to choose an August or December date through the application, is there a possibility that it would be changed?
So I can take that. So years of service is as of the retirement date. So there could be somebody that's not eligible for the August date, but would be eligible for the December date. So it'll be based on the retirement date. And from picking your date, when you apply into this program, you pick your date, 8/31 or 12/31, and certainly universities can do their best to honor that date. There could be individual circumstances where they will have to change the date. So again, there is a note that says that they'll try to honor it, but it could be changed. But again, certainly you have opportunities with the separation agreement, the general release, forms that have to be signed for you to participate in this program. You'll have opportunities even after you sign those forms to revoke them after 7 days. So there are a number of opportunities if you don't want to proceed forward with this plan.
And Jim, when an employee applies, do they receive an email confirmation that the application was submitted?
I think you're right. I think you can, when you apply, you can print a copy of your submission. And so I think that gives you the option when you are applying to print a copy of your submission.
And then Brittany, oh, go ahead, Brittany.
There's just another question that says, when do I choose my retirement options? And I'm thinking that might be referring to para, if Jim wants to speak to that as well.
So when you apply for this program, it could be easier in terms of just logging into the site. Your information will be pre-populated. You select from a drop-down 831 or 1231. You click a box to electronically sign and you hit the submit button. So from that perspective, it's very easy. Now, if you're in para, and again, once we know you're approved under this plan, we will be reaching out to you with documents that will need to be signed. We'll also be scheduling a retirement counseling session with you and go over the retirement process from CSU. And if you're a para member, we'll go over the retirement process for retiring with para and can provide links to the forms that need to be completed for para. If you want to, you can always call para and ask them to mail you a retirement kit, which will contain all the forms you need to complete for your para retirement. You can also log into your para account and complete those forms online. But again, when we meet with people, we'll provide the links to the para forms for you as well.
Terry, would you mind doing a high-level compare and contrast? I know you spoke to a slide earlier in the presentation, but I see a couple of questions that people would like to better understand why there are differences between the state classified and para option versus the defined contribution plan. Could you do a quick highlight of that and why the differences exist?
Absolutely. So again, I think if we kind of look at a 50,000 foot level, if you will, the plans themselves are very different. So the retirement plan through Colorado Para, as I said earlier, under the regulatory code is a defined benefit plan. And that stands for what you normally will hear as a DB plan. So again, a DB plan is a lifelong commitment that will pay you until your end of the retirement benefit when certainly you would pass away. It is a promise and a commitment that is made under that plan to pay you that amount of money that is derived with your years of service and your age at the time of retirement with Colorado Para. So again, we refer to it as a lifelong guaranteed benefit. Now, the defined contribution plan is very different. It is not a defined benefit plan. It is the contributions are defined by the plan, which are the employee contribution and the employer, CSU's contribution to the plan. Now, what happens with all of us that are in the DCP as faculty and administrative professionals at CSU, we are also responsible for using the educational resources that are provided to employees to manage their account portfolio. And so everyone has the option to choose their investments and to monitor and manage them throughout their career. The balance in that account is their retirement assets. They then make a decision on how much and when they wish to begin withdrawing assets from that plan. Again, very different from Colorado Para. Colorado Para, you do not control your investments. They are actually held in trust by the state under Colorado Para, and all of the investments are managed for you as a participant in that plan. And Jim or Brittany, Robin, if you have anything else to echo in that would be important, please do.
If I can manage my dog from barking, I'll try. I think Terry gave a beautiful explanation, and I think just the inherent volatility in the DCP plan versus para is how we can further explain the difference between the two options that are available, and obviously the controls that are in place that Terry referenced earlier under the personnel state board rules that do limit us with certain options to offer for this incentive. So it looks like there were a few questions in the chat, and hopefully that helped outline the differences and why there is a different plan available for para participants versus the DCP participants.
So Brittany, now if I can go back to you for just a second, I know we're a little bit over our 3 o'clock time. I did see an email, or I'm sorry, a question in the chat earlier about how are we managing all of the inquiries to human resources. And I know that in the first 2 to 3 days of the program announcement, we received over 200 emails. I'm just wondering, Brittany, can you speak to how are we doing, and where do you think we're at in our queue that continues to grow every day?
Sure. So I think within that shared email box, we are caught up to the current week. The only outstanding emails are ones that require external guidance. So I think we had some questions for, I think, potentially OGC and then some funding questions. Those are the only outstanding emails, I believe, that we're just waiting for additional information, and then we'll respond to those. We just want to ensure we're being as accurate as possible.
Oh, that's phenomenal. That's wonderful to hear. So for those of you that were echoing in that it sounds like perhaps you're still waiting for a response from us, if you wouldn't mind reaching out to either Jim, Brittany, or myself, we'll be happy to make sure that we've not overlooked your message in any capacity, and that maybe it's one of those that we're holding to get further guidance from our administrators before we can respond. Just want to make sure, as Robin said, we're halfway through the application period in the month of June, and we're doing our absolute best to make sure we can get back to people timely so that you can have a lot of thoughtful time and consideration to determine if this plan is a match for you.
And this is Jim. I see a question out there about if you're declined under this program, can you still retire? Yeah, people can retire. You know, if you're eligible to retire, you can always schedule time to meet with me, and we'll go through that process. But if you're eligible to retire, it's just like before this program existed. You would decide your date, and we would meet and start doing that retirement counseling and go through that process. So this incentive is just offering you the chance to pick from 2 dates to retire and offering you an incentive payout to retire. And so, but otherwise, you know, retirement is still just the normal process here at CSU. If you're wanting to retire, we will work with you to make that happen.
Thanks, Jim. Any other questions, or are we about ready to close out?
I think we're all caught up, and then of course if there are more questions, we'd be happy to answer those at the MyHR email. But it looks like we addressed everything in the Q&A, so I think we're good.
Thank you, Terry, Brittany, Jim, for your expertise and time this afternoon. If, as Brittany expressed, if you have any questions, don't hesitate to follow up with us. We really appreciate your time this afternoon, and look forward to helping you with your decisions. Take care. Thank you.
Thank you, everyone. Have a wonderful afternoon.